What a nice change. Finally, we are not going down today. All of crypto is going up, but some tokens are going up more than others. The Cake token is outperforming everything else. The question is, why? Who's buying Cake here? What are the news? How sustainable is that really? Does it still make sense to buy the Cake token now? So here's what caught my attention. Pretty much everything in the top 100 is up today, but Cake is outperforming everything else. And it's not that easy to find news that are relevant. There was an announcement on the Twitter channel that quite a bit of Cake got distributed to the stakers in the last year, roughly 2 million worth of Cake. But in this video, we are going to look at the historical data. How much Cake was staked over time, and is the staking program actually a catalyst for the PancakeSwap token? Now, this is where we are today. $3.05, we more than doubled in the last week alone. But things haven't always been that great. At one point, we saw the Cake token at more than $40. This is now our recent rally over here. Now, Cake is the token of the PancakeSwap decentralized exchange. Now, PancakeSwap is the largest of the decentralized exchanges on the Binance Smart Chain. In the last 24 hours alone, we saw 9.9 billion worth of trading volume on the Binance Smart Chain. It's the second most active chain at the moment. And of those 9.9 billion, 4.7 billion go through PancakeSwap alone. The Binance Smart Chain is the 5th largest blockchain in all of crypto. So that's based on total value locked, where we've got 5.6 billion. And even though in the last few months the growth wasn't that impressive, at one point the Binance Smart Chain had more than 20 billion worth of total value locked, it is still a relevant player with its 5.6 billion. In comparison, PancakeSwap has 1.8 billion of those 5.6. Now, I find it always very important to look at relative evaluations. So to look at an altcoin relative to its ecosystem token. So when you've got an altcoin on the Ethereum chain, we want to look at that altcoin denominated in Ethereum. When you've got an altcoin on Solana, we want to look at this relative to SOL. And so now for the Cake token, we have to look at the price action relative to BNB. BNB is the gas token on the Binance Smart Chain. The reason why we want to look at this relative valuation is because BNB is the safest of the tokens on the chain, right? So if we don't outperform the BNB token, then it doesn't make sense to own Cake long term, because obviously Cake is more risky. And so this is the long-term performance. This is Cake relative to BNB. And since October of 2020, unfortunately, we did not see outperformance. We saw an underperformance of more than 91%. And this year recently, this is the rally. So we are recovering, but we have seen similar kinds of rallies in the past as well. Now, what's causing an underperformance like this? One potential explanation is tokenomics. So how does the supply of the Cake token develop over time? How especially does the liquid supply develop over time? And unfortunately, the tokenomics of Cake are very complex. And probably there's a reason why they are complex. The more complexity there is in the tokenomics, the more you can hide potential inflation. Now, have a look at this. This is the total supply of Cake over time. So we've got a max cap and we've got a total supply. And apparently we haven't seen any supply expansion in the last 1.5 years. So since the middle of 2023. The price did go down since then though, by 34%, again relative to BNB. Not just because overall of crypto is going down, this is an underperformance relative to the ecosystem token. On the left side, we see the burn and the mint every day, and this is where things become a bit clearer. There are more minted tokens than burned tokens, and this should give us an indication that actually the liquid supply is not necessarily decreasing. And so here we go. This is the total supply, the thing that we looked at before, versus the circulating supply. And this gives us a much more realistic picture. When the number of circulating Cake tokens moves from 100 million to 300 million in the span of 2 years, it's very hard to outperform Bitcoin or to outperform BNB. Now here's another very important aspect. This is how much Cake tokens are staked in the staking program. Now I actually used that staking program to make quite some money. In the early days, when you locked up the Cake tokens, when the program was just launched, you were able to get 40 40 to 50% APY on this Cake token. At the same time, it was possible to borrow the Cake token for less on a platform like Venus Finance. So you could borrow the Cake token for like 15%. You could deposit this on the PancakeSwap platform for 45, 50%, and then you could get a clean interest rate arbitrage. You could make this for roughly a year because that was the maximum lock-up period. And after a year, people started to unstake. And that's then when I shorted the Cake token. Now have a look at this data point over here, right? The middle of April 2023. That's over here in the chart. This is when Cake absolutely got hammered. And exactly 1 year before that, we saw the rally. This is when the Cake staking started. So this is how much impact this has. This is a rally of more than 150%, and this is a crash of more than 50%. Now, the good news is that there isn't that much more Cake tokens that now get unstaked, right? We've already seen all of that supply hitting the market. Another encouraging data point is that the trading volume on PancakeSwap currently is quite high. It had seen a record high in January of this year. Now let's have a look at the on-chain metrics of the holders of the Cake token itself. How many people now hold Cake in their wallets? How many retail investors are there that accumulate Cake? How many whale investors are there? What is the smart money doing versus what are the plain old plebs doing? Now we've got more than 1.8 million holders on the Binance Smart Chain of the Cake token. That is an incredibly high number. Very few tokens have that much ownership. But not all of those owners are created equal. What we see on the left is the number of wallets that have at least 333 Cake tokens. So at the current price, that equals to roughly $1,000 worth of the Cake token. In the middle, we go at 10x from that. So that's now $10,000 worth of the token. On the right, another 10x, so $100,000 worth of the token. While there are almost 2 million holders on chain, there are only 300,000 holders that have more than $1,000 worth of the token. So a lot of the wallets on chain have just a few cents worth of Cake. If you have $10,000 or more of the token, you're already in the top 1.5% of holders. Now here's something interesting. We can see how the whales started buying at the end of November of last year and how they're now continuing to buy quite fast, much faster than regular retail is. So let's see if they did a good move here, right? The end of November 2024. Let's sum on the chart. So either you have been a bit early and you're now in profit, or you've been a bit late and you're slightly in losses. If you bought before, you're more likely to be in losses. Again, because long-term, Cake tends to do worse than BNB. Here's the number of first-time users versus recurring users over time. So most of the trading happens by returning users. In other words, there's probably also a lot of automated trading happening for Cake. The token is listed on all kinds of centralized exchanges, and so there are arbitrage bots that buy and sell the token back and forth. There isn't really that much hype around Cake anymore. There was a lot of buying and selling at the end of 2021, but since then it's mainly holders and arbitrage traders that still continue interacting with the token.
Here's the thing, the market isn't expanding as quickly anymore as it used to, right? With the Trump push, now the question is what can come that's even larger than that pushes prices even higher. And because of that, because it's more and more player versus player, even though the market in aggregate might be somewhat balanced, it's still just a few assets that outperform everything. Have a look at this picture. The tokens that are between 101 and 200 in terms of market cap, they in the last month went pretty much plus minus zero, right? They gained slightly. But when we look at this picture here, that's just because there are a few massive outliers. And the question really is, when we look at 100 tokens, how likely is it that we are going to pick Toshi or the Swift coin or AIC? Especially when we hold a diversified portfolio and we have, say, 5 or 10 altcoins, the likelihood is pretty high that that altcoin portfolio is going to underperform. Because if you held AI16Z and you made a minus 76% loss, or you held Turbo and you lost 40%, or you held Memecoin or Mu and you're down more than 30%, it's very hard to still have positive performance. And I'm a fan of trying to get the odds in our favor, right? It's possible to pick the winners if you are very early and if you adopt something like Trump in the earliest hours and if you are one of the top traders, that is possible. But if you don't have time to watch the crypto markets 24/7 or if you're not based in Asia, then it's very, very hard to get those winners all the time. And so why not go the easy route? Why not simply bet on falling prices? If most altcoins do worse than Bitcoin most of the time, and if there's just a few assets that outperform that massively, then we can just pick a random asset over here and we are very likely going to make money in the next month. We just have to make sure that we don't fall for those few tokens that are discussed everywhere. When we bet on falling prices of Chili's or of Safe or of DYDX, and that's a comparatively safe bet. It's definitely still risky because this is the crypto market and the crypto market does get manipulated, but it's less risky than trying to find the needle in the haystack. And there are some tokens that underperform more consistently than others. For example, this one over here, Balancer. I started shorting Balancer in the middle of 2022. I went on and off about that position. Sometimes I was short, sometimes I was out of the market taking profit. But since that point in time, Balancer underperformed Ethereum by more than 80%. So it's not just that most altcoins do worse than Bitcoin. It's also that some of those altcoins underperform most of the time. And so I've made several videos on this topic. It's a comparatively advanced topic because it's also easy to get burnt with shorts. That's why most retail investors don't get involved in this. But there are premium tutorials how to win in bear markets by shorting altcoins. It's 42 minutes in length. Then there's another video gaining from relative valuations. Then there's another one shorting optimism relative to Bitcoin. This has been published quite a while ago. This, by the way, is now optimism relative to Bitcoin. So this was a good position. And the reason why most altcoins do worse than Bitcoin is tokenomics, as in more and more tokens get issued over time. And if the demand cannot keep up with the token issuance, then the price has to underperform the rest. Now, this is not a good strategy during a massive bull run, but it is a good strategy during a bear market, of course, but also during sideways movement. Because again, even during a sideways movement, money flows just into a very few basket of altcoins. Most alts do worse. And so this is all part of the premium membership of this channel. Premium is not just about shorting, it's also about on-chain analytics. It's also about portfolio management and risk mitigation. There's more than 100 tutorial videos in total in premium. Now, this is not a topic to make a 10x next week, but it is a topic to outperform steadily and slowly. And if you can only outperform, say, by 30 percentage points per year, and Bitcoin itself already grows by 30% per year, which I believe is somewhat of a conservative bet. Then if we do this over 4 years, and again, we don't have to trade very actively, we can 8x our capital. Now, if you have just a few $100 of invest, then an 8x within 4 years doesn't really sound that great. And then by all means, feel free to gamble with that money, right? Because you can also recoup the money very quickly just by working more, just by saving more. But if you've got already several years of your income saved up, or if you've got $10,000, $50,000, if you have more money, then an 8x does matter, right? 10K becomes 80K in a relatively okay-ish time period. And so I actually find it easier to make money in bear markets and during times like this. Again, because we don't have to pick the winners. We can simply have a diversified portfolio of short positions. Again, because most altcoins underperform Bitcoin most of the time. If you own a lot of altcoins and you hold them over 10 years, you're probably not going to do that well. Because have a look at the top tokens 10 years ago. How many of them do you really recognize? Paycoin, BitShares, MadeSafeCoin, NXT. Yes, Stellar is still around, Dogecoin is still around, but where is Peercoin, Counterparty? Dash also underperformed Bitcoin quite a lot, so did Namecoin. So really the crypto markets are not venture capital markets, right? The crypto markets are very much player versus player, and it's better to simply bet on the vast majority doing worse most of the time. Not in a bull market, but most of the time. And I believe currently this does apply. Currently we are in most of the times. The crypto valuations are comparatively high. A lot of people made profit and took profit at 100K. And so if your portfolio is large enough, it's not just a few $100s, but it's maybe in the $10,000 and above, then feel free to check out the premium membership. There's also a 1-week money back guarantee. So in case you don't like premium, simply message me within the first week and I'll refund you 100%. There's really zero risk for you.
Now, does it make sense to buy the Cake token right now at these current prices, at the current market cap? How does the market cap compare to, for example, Radium, right? The largest decentralized exchange on Solana. How does that compare with trading volumes versus price? Here's a nice overview. This is the Automated Market Maker, or AMM, overview on CoinGecko. And of course, at number 1 is Uniswap with a market cap of close to 6 billion. Then comes Radium at 1.5 billion. And then comes PancakeSwap at 0.9 billion. Now, is this valuation justified? In the last 24 hours, we saw 4.7 billion worth of trading volume on PancakeSwap. And at the same time, we saw 3.9 billion worth of trading volume on Radium. So just based on the trading volume in the last 24 hours, it's not necessarily justified that Radium costs almost double as much as PancakeSwap. The capital in both applications is very similar. It's both around 1.7, 1.8 billion. So again, the big difference in market cap valuations doesn't really make that much sense. Yes, PancakeSwap more than doubled in the last 7 days, but it still seems to be, relatively speaking, undervalued to Radium. Now, unfortunately, the price discovery does not happen 100% organic, because most trading volume actually happens in black boxes in the centralized exchanges, so in the Binances, Maxis and Bybits of this world. And on top of that spot trading volume, we've also got bets on the price in the form of perpetual futures. Again, that's dominated by Binance. So if enough people want to buy the Cake token, Binance can manipulate the price down. If enough people want to bet on falling prices of Cake, then Binance can buy up the token and short squeeze people. Now, I personally think it's a better opportunity to short than to long this token, because we didn't see rallies that lasted much longer than what we've already seen in the past. So this is currently a 75% outperformance, and in the past we have seen 99% over here or 140% over here. And so the question really is, if we set ourselves up for a position here, do we want to buy and then potentially use a trailing stop loss and exit quickly, or do we want to bet on falling prices and then, in case we continue rallying further, add more to that short position, basically dollar cost averaging into a short? I think the second option is more promising, but of course it is more risky, because it's all about risk management with short positions, right? When the position goes against us, we don't want to just keep on holding. We want to have small enough of a position that we can double up, potentially triple up, and then bet on the long-term continued underperformance. If you got some value out of this video, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers.